Live and good morning to everybody. We are live. Good morning to everybody who's joining us today for Behind the Markets Thursday edition, Enterprise Thursday as we call it. And welcome to you, Vernon. How are you doing?
I'm doing fine, actually. How are you?
Good, good. It's we're getting close to a holiday. I know it's been a while since no, I think the first half of the year were packed full of holidays until we get to about August all the way up to Independence. Then from there, nothing again. So we're trying to get back to the holiday outlook, my brother. It is
Mhm.
Thursday, Enterprise Thursday, as we all like to see it. And on this Enterprise Thursday, we'll be discussing a few deep dives. I think today we're going to finally give you a little bit of a break from the debt talk. We've been having all this debt deal talk going on, and these debt symposiums and everything. And we'll get any new information. But obviously, there are a few stories regarding it. But Vernon, we are going to get in touch with today's story. With today's conversation, which is the 29th of June. It is Enterprise Thursday, and let's get down to it. You won't want to miss the final session, by the way, which is talks on picking a team. If you're an entrepreneur, we're going to be talking about team selection, how to actually pick the people to work with. Right. So let's get down into the market analysis for today. Kwacha did move down again, 0.42%. We had a strong sell-off of the Kwacha since the deal was announced. So it seems as though we're still not having that strong rebound yet. But obviously that's going to take a bit of time. There's still funds that have to flow in. There's signings of MOUs. There's a lot of things that need to be done. There's next steps, but this is just at least the celebratory moment of things properties coming to starting to come right. 17.35. That's where the Kwacha ended yesterday, 0.42% down from the day before, but still up 0.9%, up 11.21% from where it was 30 days ago. And year to date, it's the Kwacha is stronger by 4.12%. Technicals are showing that we're still in a selling position for the dollar, but it is currently starting to move out of that and starting to move into a buying position. Yesterday, we did see the stock market sell off yesterday, 0.05%, with another sell off day in Standard Chartered, where we've seen the stock market down 0.18% on the week and down 12.05%. I'm sorry, up 12.05% year to date, but in the red in this month. It's been a red month for the stock exchanges. We're heading towards the first half of the year. We did see the bond index move up by 0.12% yesterday, and a positive movement in the US dollar bond index by 0.13%. So we did see buying up happening in the bond market, with interest rates moving down about 0.04%, moving, showing that we're actually having quite a positive outswing for today. Next thing that we're looking at, by the way, next thing we're looking at here is we're seeing even the Rand move down yesterday by 0.78% versus the Kwacha. It was a weekday for the South African Rand, while the dollar was actually quite strong. The year to date, the Rand is down 13.06%. That may just hold off inflation just a little bit, with 6.1% movement negative on the dollar on the month. So we are seeing that a bit of a negative month has come in for the Rand. That's good for us and good for cross-border trading activity in terms of that. But volatility of FX is also becoming a problem for those who are coming across, unable to see how much and what to plan for. We did see that the GRZ bond index is up 13.2% year to date and 1.68%, one of the strongest months that we've seen it moving halfway through the year. We are seeing that we're on track for about 26% return on investment on the GRZ secondary market bond index, which is good in terms of how it's performing. But those are mainly due to the long-term bonds that are performing like that, not just the short-term ones. But we also are seeing that in dollars, it's up 18.44% for the offshore investor. They have experienced a nice little hockey stick, as you've seen since about June 8th. The bond index has kind of been exerting a little bit of a hockey stick. We also have seen that the GRZ yields are kind of moving upwards over the last 2 months. But remember, on year to date, they're up 0.45%. Commodities yesterday, we did see that copper moved down 1.22%, while oil slightly moved up and then started to shift back downwards. Slightly moved upwards yesterday. We did see that copper is still down on the year, 1.27% on weak Chinese data, while we're seeing oil starting to move up a little bit on shortage of supply. These are short-lived terms, while we also saw gold move down by 0.19% in dollars, up 5.17% year to date. Now, looking at the wealth insurance assets, we did see that Bitcoin was down 0.1% yesterday, with Ethereum down 0.2%, but gold up 0.23%. in Kwacha. So we are seeing that a lot of even the defensive assets took a little bit of a beating yesterday. But year to date, this is how things are looking in terms of where we are, what asset classes have performed how well year to date. As we can see, Bitcoin still highest, mainly due to that first quarter where it almost doubled, but it has actually shed off. So this quarter has actually been relatively weak for Bitcoin and also Ethereum. They've also been in a losing position because year to date, they were both at 70 and 90% in March. But this quarter, we're starting to see that they're both kind of shedding off a bit of weight right now. Gold only up 0.8% year to date, while we're looking at we're looking at dollars, which are down 4.1% year to date, and the stock market is up 12.1% year to date and 13.2%. Now, we'll be getting into our four horsemen on the other side of the break. On the four horsemen outlook, we are quickly, in fact, just quickly looking at it. Italian PPIs are down 0.43%, while CPIs declined down to 6.4%. So inflation is coming down. And unfortunately, US crude stock inventory is down 9.6 million barrels. While we're looking at EU loans went up to corporations, those rose as well, while MBA mortgages up 6.2%. We did see that Spanish retail sales were up 6%, while German consumer climate was down, and wholesale inventories were also down. Mortgage industry also did start to pick up. So a strong mortgage industry with a few loans starting to go out, but unfortunately interest rates are up and inflation is still coming down, with sales still a bit soft. So we'll return on the other side of the break, Vernon, to talk about our main deep dives for the day. All of you, catch you on the other side. And welcome back to everybody. Vernon, how are you doing? We are back on the other side.
Absolutely, we are doing great. So far, the morning is lovely. The day seems to be great. How are you?
Good, good, good. I think we're getting a little bit of feedback, but it is telling. I've got our main question for today. For everybody, please take a look at it and take a listen to it. What's better for starting a business, teams or going solo? I think I can predict what most people's answer is going to be. But what is better for starting a business? Is it starting as a team or going solo? What do you think? What's your answer? Give us your answers, give us your thoughts. We'll be discussing this in terms of team development, startup team development, or getting into business as a team. Now, let's get down to the other side of things. As we got out of the four horsemen, we did see that inflation is still starting to slide down, with risks still in the energy sector, and we're seeing that the U.S. crude inventories are coming down. We're seeing that interest rates are still coming down and loans are still picking up as well. Spanish retail sales obviously were the main number, but we did see that the growth side of things is still weak, though there seems to be a little bit of a rebound in the property sector in the US. Let's get down to our daily deep dive. First news that we picked up here is the IMF board is set to meet on July 12th for the first review of Zambia's program following the debt deal. So this is about trying to access the $188 million afterwards from the IMF. I think that's the one thing that we do see. That's one of the things that I think we're all awaiting. Remember that part of the benefits that we did point out to all of this was that now we'll be unlocking support from bilateral support from there'll be financial support coming in from partners. So this is the main thing, is in this rapid credit facility, extended financial facility. Now, Ministry of Trade and Commerce calls for citizen participation and value addition. Minister of Trade and Commerce, he was speaking in Ethiopia as he's on his way to the China Africa Forum next, did actually say that no country can develop without the involvement of its citizens through partnerships. And he did say that debt restructuring has created more fiscal room for the government to meet its trade and investment goals. Simultaneously, PMRC did call for improved business climate for and FDI incentives to help redirect Zambia from a debt-fueled consumption to profitable investments in manufacturing, tourism, and agriculture, and also to support the reformation of the mining sector. So, in other words, trying to get away from borrowing to spend to actually investing to grow and utilizing revenue to actually build a nation. So this is something that PMRC did point out yesterday, alongside the talks from the Minister of Trade and Commerce, who has called for the citizens to not stand on the sidelines. And this is actually quite an important conversation, because one of the main concerns, I think, whenever I've been giving parallels regarding the last debt renegotiation and now, was that we saw massive levels of economic growth. I gave you the macroeconomic outlook for the last one, and obviously what to expect from the next decade, effectively, because we've actually managed to stretch out our debt, and we're still working obviously on our private debt, but we're just trying to stretch out the rest of our debt. And by the way, that's the last part of the hurdle, trying to get the private creditors to now come up with their resolution to all of this. Now, I think the first thing we all have to pay attention to is what went wrong the last time that Zambia's economy grew almost 5 to 7-fold. The stock market went up almost 10x. We saw the stock market rally so strong. We saw the currency was stable. Inflation was flat. Salaries went up. What is it that resulted in that system not working out? Well, the main thing that we also have to pay attention to was citizen participation. Citizen participation has always been a problem in Zambia in getting people to participate in the financial sector, financial markets of the country, and also the business markets. Because what people may not understand is that it's the financial markets and the business markets where wealth is built and lives are transformed. Okay? Careers, yes, are very important to this. But I'll always say, if you have a career, you need to make sure that you're investing heavily. And then you got the entrepreneurs who need to make sure that you are growing aggressively. So these are the two mindsets people need to shift into, is to making sure that their money is working or their ideas are working. But these are the two areas where wealth is built. Because a job alone does not guarantee wealth. It gives you an income That's what it does. It gives you an income. And if you make the mistake of turning that income into a lifestyle and not turning it into a portfolio, which then supports your lifestyle, this is where the problems happen for so many people. Because the moment the job market slumps, like it did a few times back, the moment the job market slows down, it takes out a lot of people with it. Okay, so this is the problem. There's an over dependence by a lot of people on the job market instead of actually building some wealth in the financial markets. So, what we're hoping for now, this time as a country, is that our citizens will start to get more involved in the financial markets and in the business markets. That is what made the two parallels. I call it the two parallel growths that we saw in the same period of 2000 to 20. From 2000 all the way to 2013. We saw Zambia experience the 7x economic growth, while we also saw China experience the 7x economic growth. So, what was the difference between Zambia and China? One was that Chinese people are very involved in their economy. That is the big difference. The Chinese citizens are very involved. 95% of the Chinese stock exchange is owned by Chinese people. You have 400 million Chinese who actively invest in their stock exchange. They own a lot of their properties and they are active entrepreneurs. That is the main thing that you are seeing instead in terms of China. China are very good at being active. Unfortunately, Zambians were the other way around. Now we're starting to change, but we were the other way around in the fact that we often decided that we would wait for other people to create jobs and create businesses for us. We would often wait for the rest of the world to own all the assets. We would not take it seriously in making sure that we owned our economy. So now, hopefully, this has been a turnaround and a strong lesson for Zambians that you cannot, it doesn't matter how well your economy is doing, it doesn't matter how fast your economy is growing. One of the biggest things you have to work on is making sure that you are actively participating both in the financial and the business markets. So it's all good and well to start talking about the economy is going to grow X amount and the economy is going to grow a lot more. The problem comes down to the fact that the economy is not going is was in the hands of the other people. So let me give you a quick outlook in terms of what I was talking about when I was saying that a lot of it was actually a lot of the problems was that we gave too much of our economy, we gave too much of the responsibility of our economy to the foreign investor class. Now that's not just we like to blame that on our government to say no, but they're the ones who support this, and yes they do. They have a tendency, our government generally has a tendency to support. But here's a quick scenario test that I actually gave out a while back, and I hope you all are paying quick attention to this. So I said between 2001 2014, the Zambia's economy grew 583% from 4 billion to 28 billion, the fastest economic expansion in the nation's history. In China, the economy grew 615% from 1.3 trillion to 9.5 trillion, sorry, not billion, the fastest economic expansion in the nation's history. So if we're seeing these two changes, these two issues here, but poverty levels in Zambia rose actually from 88% to 89%, while poverty levels in China declined from 88% to 36%. Why? That's because 75% of Zambia's output is controlled by foreign companies, while 75% of China's output is controlled by locally owned companies. In other words, the economy is controlled domestically. Yes, there is participation of the investor class, but the economy was controlled domestically. Now, I know that most people will now start saying, you see, that means we just have to take over everything. No, the Chinese are also very competent at running things. That's the difference. We have decided not to be competent. We just want to grab things and still think that that's going to work out. Let me tell you the truth. It is not. What we need to start learning to do as Zambians is start learning to build things, because this is where we get it wrong. We don't build businesses. We don't build minds. We don't build. We just see, the foreigners are doing well. Let's just take it. That's where the mistake starts to happen. So this is why I really do look at this story by saying we should make sure that we are actively participating in the building of our economy, not just in the taking of things, in the building. Okay. And I know people love that statement, in the building, but what I mean is in the actual building of our economy. So making sure that we actually own and operate things that we have built. So when you go back into the past and you do a measure of China versus Zambia, I'll even give you one other point where I can tell it to you. 1960s GDP per capita, real GDP per capita in China, $238. Real GDP per capita in Zambia, $1,121. 1990, real GDP per capita in Zambia, 900 in China, $904. 1990, real GDP per capita, $851. 2020, real GDP per capita in China, $10,000. Real GDP per capita, $1,000. If you take a close look, you'll notice that Zambia's economy has not expanded faster than its population. It has been the same for 60 years. But the difference is that the Chinese have actually opened up. They own things, they build things. They are very, very, very intentional about how much they own, how much they operate. I am going to stress that point a lot so that people understand the importance of making sure that we actually own and operate things that we build. And that's where wealth is built from. Right. So let's get back to the main conversation that we had in terms of our deep dive. The other part that we're looking at as well is Bank of Zambia has expressed concerns about the rise of Ponzi schemes in Zambia. FUD, people. We've been seeing that running around Facebook for the how long. Ponzi schemes, where they see them as deposit for pay organizations that are operating with no financial license. Bank of Zambia is currently working with authorities to clamp down on fraudsters, and BOZ will also push for a more comprehensive battle plan to kind of deal with these financial plans, which should also include education. So my concern is that the lack of financial education is something that we do need to start addressing in making sure that we are actually fighting the rise of Ponzi schemes. But the reality, people, is the rise of Ponzi schemes really just reflects the greed of the people. No matter how much you want to try and run away from it, the rise of Ponzi schemes is a reflection of the greed of the people who want to get rich too quickly, because a fraudster cannot operate in an environment where nobody is offering, where people are not greedy. Okay, they absolutely require greed for them to be able to thrive. So I think that's the first thing. Next thing we've also been seeing is that Forex shortage is actually behind select fuel shortages that people have been seeing around the country. ERB noted that fuel shortages in Kitwe and other parts of the Copper Belt and select OMCs are facing logistics issues due to the fact that they were facing shortages in Forex over the last 6 months. So that was a deep part of the convo yesterday. So if all of you are seeing issues and saying what's happening in the Copper Belt, there were issues with Forex, obviously, in the last 6 months, obviously with people exiting the bond market, the offshore investors that were exiting the bond market, on the instability about the conversations with bilateral creditors, all sorts of things were now coming into the fold. Other news that we're seeing in Africa is Zimbabwean inflation has now reached crisis levels. Zimbabwean inflation has returned to triple digits of 176%. Zimbabwean families are now spending 10 times more than they were spending 16 months ago, with food prices up 750%, petrol prices up 900%, and fertilizer prices up 700%. If you think you have it tough, think again. Our friends in Zimbabwe are having the battle of their lives. This is inflation numbers in Zimbabwe. As you can see, they had been facing 100% inflation. It dropped down in about January with hopes that it was going to improve. But you can see over the last 2 months, inflation figures in Zimbabwe have now jumped back over 176%, which is really, really, really high. And these are serious levels of inflation that many cannot deal with. In other news in Africa, Tanzania has actually targeted that they are planning on generating 6,000 megawatts of electricity by 2025. They've been seeing several microfins that have started to support renewable energy at the grassroots level. Generation capacity, though, has improved at plant level at 10%, but off-grid solutions and decentralized solutions have been the main stimulus of growth. And I just want to park on this issue for a little bit, because we talked about this actually last week. We talked about that actually last week when we were talking about when we were mainly having a conversation about the green energy future of Africa and clean energy future of Africa. And one of the key things that kept on being pointed out was that one of the most effective things for clean energy is decentralized solutions. Decentralized solutions are one of the best ways. In other words, mini grids, ways that we've put. Remember, we have a policy now that 1 million kwacha out of each CDF will be going to Rural Electrification Authority to make sure that they can try and help build something at least worth 1 million kwacha, or start some energy initiative worth 1 million kwacha every single year to try and support electrification around the country. So that is financing towards that. And because Zambia is also, because we are dealing with mostly rural societies that are disjointed and disconnected, then decentralized solutions become the best way. The problem is they become hard to finance, but they are seeing that microfinance firms in Tanzania are actually stepping up to the fold. This is why one of the things I've been stressing is that if we can look at some sort of reforms, even in the finance sector, to help support green lending, to help support off-grid solutions as well. Off-grid solutions at a household level, and mini grids or decentralized solutions at community level are some of the best ways to get electricity to the Zambian people as quickly as possible and as efficiently as possible than building out mega grids. Mega grids are good for the industrial sector, but it's also good maybe also to consider incentives for mining corporations that, like we've seen with Dangote Cement, who built their own power stations. It might be interesting to see how we can get mining corporations also to make sure that maybe they can also build out their own power stations, or possibly we can get companies like, I don't know, Copperbelt Energy to start doing that. How do we get them to start making those investments? Okay, to start building out their own investments in certain areas so that they can power their own operations. Because remember, they still are the biggest consumers of electricity. It would be an interesting way to get them to try and see how they can build it out. But also, the main thing also for us is how do we get our off-grid solutions for our citizenry? Because I think that's been the balancing act. Trying to keep electricity cheap for the citizens, but trying to also keep it well for the mining sector so that we can get to 3 million. Remember, it's now imperative for us to be sustainable with debt, to repay our debt properly as a country, and for our government not to be dependent on trying to get FX from the market, but being able to get FX directly from taxes and be able to pay off the debt. For our government to be able to do that primarily, we must be able to expand electricity while also then being able to give our mining sector the ability to grow to 3 million tons. That 2 to 3 million tons is a very important number. Now, trying to get it as close to even 1 million tons, because we're operating around just around 60,000 tons a month in terms of output. We'll be waiting for inflation figures coming out today, and also trade figures coming out later today. Those are key data points that are going to tell us how's our mining sector looking. But the problem is we still haven't had an increase in output going forward. Other deep diving news: we did see that U.S. mortgages and did turn higher, but the housing sector still is red hot. Mortgage applications rose by 3%. MBA purchasing index rose by 2.8%. Mortgage index rose by 3%, and mortgage refinancing index rose by 3.31%, meaning that the mortgage sector is still red hot and houses are being built. That's good for copper. That's good for commodities. A strong housing sector that we're seeing in America. Hopefully, we can get that rebound in the Chinese housing and infrastructure sector as well to help support the green energy transition. Oil prices jumped 3% on the day. This was earlier on news. On the biggest decline, the energy agency did say that crude inventories dropped by 9.6 million at the end of June 2023, and this was the highest decline in 5 weeks. The rally appeared to be restrained, obviously, by lingering worries about interest rate hikes by global central banks such as the ECB, the UK, the ECB, the BOE, and the Fed, which looks like it might start returning to rate hikes. Simultaneously, we did see copper slip on weak Chinese data. Copper fell on data that shows that China's industrial profits fell further in May. More headwinds on the Chinese manufacturing sector driving copper demand, but focus next week will be on the PMI data. Focus this week, will be on the PMI data that is set to come out of China. We'll be looking forward to some of that information. and to see how market how copper as an industry is going. For our crypto craze people, we did see that Tether signs an MOU with the Georgia government to develop a Bitcoin B2P infrastructure. This will be focused on key infrastructure to help a thriving startup ecosystem for the people of Georgia to start creating applications. This is designed to foster a P2P technology at state level and help build out financial tools around it. They're also going to be focusing on education on Bitcoin, blockchain technology, payment infrastructure for merchants, developing a resilient, open, private P2P communication system that will encourage the people of Georgia to create applications around blockchains. Blockchains are seen to be some of the strongest part of growth in the future. And if you think that blockchains don't play a role in Zambia, think again. I think there is a project that was being worked on, I think with Zambia Breweries, where there is a way to tag barley, wheat and barley sales from the rural farmers using blockchain technology and track who it's supposed to be from to make sure that the farmer gets the best benefit as it goes into the production cycle. So blockchain technology has been proven good for trade. It's been proven good for finance. It's been proven good for agriculture. It's actually got a lot of good to it. And it would be good if we can get even our people to start thinking about things like this. We are coming up with a blockchain policy. This is a good thing as a country. Now, hopefully, we can take a step further and start learning how we can start training people in the technologies of the future. Remember, I've always said that Zambia is a decentralized society. So decentralized technology and decentralized solutions are often the most effective within Zambia. Like, for example, I have said that mobile money thrives merely because it's a decentralized solution. It's decentralized nature. In fact, when it wasn't decentralized, that's where it started to fail. So before we get into figure it out, I just want to give everyone a welcome again. Thank you again for joining us. Remember that our main question today is what is better for business? What is better for going into business? Being a team or being a solopreneur? What is better for business? Is it being a team or being a solopreneur? Now, I would actually remind everyone, if you are watching this and you would like to get as many of your friends here, please feel free to tag your friends in the comments. Tag as many, share this video with your friends. We need to get these messages out. Okay, remember that we always say to people, why don't we know enough about the economy? Well, here's a platform where we do offer it to as many people as possible, and we hope that you'll be able to share it with as many people as possible. So don't forget, share, click, obviously, like whichever platform you're watching on, and give us tag one of your friends in this who you think need to think about this. So today we're going to be talking about teams. Give us your answers in the comment section, or send answers directly to many of them. We would like to read them out. What is better for business, being a team or being a solopreneur? Especially for starting, is it a team or solopreneur? What is better for the business, not for your wealth, for the business? Okay, right. So let's get down to our figure it out section. And figure it out today, we're going to try and get through this study that was done by William T. Gross, founder of Idea Lab, the founder and chair of the Idea Lab Incubator. Now, he surveyed 200 startups, and he asked, what were the key determining factors in the success in these startups? And they found 5 key factors. Now, everyone always thinks money is the number one issue, but look where it ranks. The number one factor was timing. In other words, was the product they created, was the problem in society rising and growing? So remember last time we talked about things like product market fit or problem solution fit. Finding a problem and solving it and creating a product, because we always say a business is a problem solved with a product built with a process. Just always remember that definition. If you're watching, write it in the comments. It is a problem solved with a product built with a process. Okay. If you can remember those 3 things, you'll remember the importance of it. So the first thing is to actually find a growing problem in society that is profitable. And that is why the number one issue was the 42% was down to timing. Did people who came up with solutions time it in a way that they found a problem that was just taking off? It wasn't too competitive. So there's what we call the 5 levels of awareness. when it comes to consumer awareness. And I just want to quickly share about this. There are 5 levels of consumer awareness. One is an unaware group. In other words, they don't even know they have a problem. The next one is unaware, is people who are problem aware. So they know they got a problem, but they don't know what solution there is. The people who are solution aware, in other words, they know what type of solution they need, but they don't know where to get it. Then there are people who are product aware. Okay, so they know all the options they have on the table. Now, why should they pick you? So these are marketing questions that you have to try and deal with whenever you're trying to come up with your solution. So it's mostly the people who discovered a solution to a problem aware group. So there wasn't too many competitors that came in. The market wasn't sophisticated yet. And because it was problem aware only, they were the ones who could step in first, get first movers advantage, and really ramp up a solution and learn the most about the market. One of the best things about first movers advantage is not that there's something about coming first. First movers advantage generally benefits when it is people when in the fact that people can learn first. Whoever goes in first can learn first and learn the most. Okay, so if you take on first movers advantage with a learning mindset, you can actually take on that first movers advantage very well. But a lot of people don't take on that first movers advantage very well. But what was the second thing, which we actually have seen here, was teams and execution. The ability for a team. So it's timing, talented teams, then the idea, then the business model, then the funding. Okay, so about 42% of startups found their success based on their timing. The 32% found it based on their teams and executions. 28% found it on idea. 24% found it on business model. 14% found it on funding. So that the lesson to be learned here is the top 2 factors in the success of a business is timing the solution to a problem-aware problem that's about to pick up, to a problem-aware market that's about to pick up, and having the right team that can execute it well. So they actually put up the word team. And the reason they always put up the word team is because venture capitalists are very sticky about solopreneurs. They find it key man risky, but they also find that people who operate on their own may not be reaching their full potential, but teams they often are very comfortable with when they can see a group of people, not too many, even if it's just 2 or 3, coming together and forming a business. There's something about a team that makes them feel a lot more comfortable. Why? Because teams tend to produce a lot better ideas. They tend to have complementary skills. There's the old thing in the Bible: one can chase 1,000, two can chase 10,000. There's a kind of multiplication of results that come whenever you're dealing with teams. But obviously, there's a lot of headaches that also come with teams. So today we're going to talk about how to actually get through this team selection thing. So the first thing I wanted to share with you today, to help us build this kind of model out in terms of teams, is a video by Ray Dalio. So there was a mentoring session that was happening between Ray Dalio and P Diddy, and he was actually explaining multiple things to him. P Diddy was reading Ray Dalio's book Principles, and he went to his house and they were talking about this. They actually filmed the whole thing, and they talked about, at this point they're talking about how to select a team. So P Diddy asked Ray Dalio the question. So the build up to this, he asked him the question and says, "Look, I've dealt with people who have interviewed well. I've tried to open up people into my team. I've written a very good specification sheet. They've interviewed very well. 3 months into the gig, all of a sudden we're having issues." And Ray Dalio now explains what is wrong most of the time with the hiring process or the team building process. Where is the fault coming? He actually explains it very well. And it actually is something that I've actually now started to change in the way I collaborate with people as well, work with people. There's certain differences I'm looking for now, as opposed to what I used to look for a lot. And I am seeing the answers here, and I will share all of those at the end. So please keep answering. What do you think is more important? And share this, by the way, with many of your friends. Tag them and ask them the question: what's better for starting a business? Is it a team or going solo? So here's a clip of Ray Dalio when he answers using what he calls his 3-level assessment system of how to actually deal with team selection, how to deal with the right teammate.
Things that not just the skills. There are 3
Okay.
things that everybody brings you. Um, skills is what almost everybody hires for, and it's the least important of the three things. The most important things are values, abilities, and skills. So first, what are their values? Because if you're not values aligned, you're going to have a problem. Like, how are you going to be with each other? The second thing is then abilities. Like some people like you, a very creative thinker. Somebody may be very reliable. They're not creative. But each person has a natural ability and abilities that they've gone to develop. Those are the things that make you excel or worse, bad at things. And then you have skills. And skills is like okay, you can play the piano, or you can sing, or you could do that. So that's learned. But if you start to look at, okay, what are the person's values? Where's that coming from? Are we going to have simpatico? Because at that deep level, you have to have that simpatico. You're on a mission together. It's not just a job, right? And then their abilities. So you got to get the spec sheet right. Once you know the language and you've got it down, then they come and they meet you, and then you do those kind of right tests.
So, as you can see, there's an actual difference in his approach, which actually makes sense. And if you read, even Phil Knight talks about the same thing of when he was hiring people to work in Nike, he wasn't hiring them based on their skills. He was hiring based on their beliefs. Because he said, when you are building a business, especially at the earlier stages, the people you need to bring in must equally be believers in what it is you are building, because there's going to be a lot of sacrifice at the beginning. So even your founding partners, the two of you or the three of you, you have to ask yourself, do you believe in the same things? It's very similar. I think, look, it's very similar even to the marriage question. And in fact, very few couples ask these questions of each other. Do we believe in the same thing, or are you hot, or do you have money, and then we're kind of forming together? The reality is we do the same things even in starting businesses with business partners. I've been through my fair share of business partners, and a lot of it went down to the fact was I thought that if somebody had a skill that I didn't have, perfect, now we can just start working together. And that was the mistake. That collaboration is first built on shared values and vision and beliefs. The foundation of a good collaboration is a belief system. It's a shared sense of belief. And this is why you have to go deeper than just a person's CV. Okay, this is why you have to go deeper than things they've learned. So he's saying start with the beliefs they have cultivated in their life. Are you aligned with these beliefs? Because most of your friction is going to come from values and beliefs. That's where the majority of your friction, especially if you are going into business with somebody, if the two of you are going into business together, do you have shared beliefs? And even my business partner and I, we've been through this conversation a lot, and we discovered that we have a very similar sense of belief when it comes to the industry we're building, our view on the industry, the way we operate personally, the things we believe in, the reason we're doing this. We share those things, and that has allowed us to weather many storms and many ups and downs. It's allowed us to go through many of these things as well, mainly because of a shared sense of belief. Now, does that automatically fix anything? No, but it does give you a solid foundation. So the foundation of team selection is not, according to Ray Dalio, is not the skill set. Because what he's trying to tell you is skills can be learned. Anything that is skill oriented was learned at some point. Nobody had that skill to begin with, whether it's playing the piano, whether it's running books, whether it's event organizing. Those are learned skills. Anybody can learn things. Okay, learning is a capability that is innate to humanity. But what he's trying to say is beliefs are some of the things that tend to be chosen. People choose their beliefs very carefully. So when aligning to build a team with somebody to start a business or build a venture, whatever it is, the question you need to ask is, do me and this person have the same belief? Do we share a vision? Do we believe in the same vision? If this is where you're struggling to have a conversation, perhaps ask yourself if it may be right to go into business with that person. The second thing he then says is abilities. Now, he's very careful to separate abilities and skills. Because what he's saying is on a CV, you're going to see a lot of people's skills. But what are their natural gifts, their natural talents? You're often going to see that with them in motion. what are they that's different? So just because two people believe in the same things, even in the Bible, they say body of Christ, but different parts. Okay, saying an eye cannot be a foot cannot be an eye. In other words, each of us are endowed with different gifts, different talents. What is your natural gift that if we just sharpened it a little bit, you'd excel in it? But what are you naturally inclined to? Are you a creative person? Are you organized? Are you a go-getter? Who has the natural things that can complement each other? So what he's talking about is shared beliefs, complementary abilities. Okay, that's what he was looking at. The core foundations of teams are shared beliefs and complementary abilities. So if the people, two or three people, have got shared beliefs and complementary abilities, you often find teamwork is much better, or it can actually build much better, or it can bear a lot more fruit. But the problem is that these are areas we don't. We just look and say, oh, you are a computer scientist, I'm a finance guy, let's build a fintech. And then we don't believe in the same things. We have different views of money. We have these differences start piling up. And the reason why everyone has nightmare scenarios in entrepreneurship, especially in working with teams, is because nobody is asking the values questions before merging as a team. Heck, nobody even asks that in marriage these days. Okay, everyone's too afraid to figure out each other's values before even getting married. And I always view a marriage as a family team. The mother and the father, or the husband and wife, they are a family team. Okay, they have to they're building a family there. Their finances are there. Remember, the majority of millionaire wealth around the world is in families. Okay, in fact, the majority of millionaires are family people. In fact, the probability of building wealth in a family is far higher. So I think we all have to now bridge this conversation to say we need to make sure people, before joining in any form of a union, whether it's a business union, marital union, whatever it is, do we share values? Okay, because once we can get past that bridge, then there's a lot. So I want to talk about some of the other questions, the other things that come into this conversation of team building. Now, remember, it's along the journey of these 6 fits that I've been talking about, where we've been dealing with founder market fit, problem solution fit, team vision fit, product market fit, and market business model fit, and brand, society, and culture fit. Now, we've gone through founder market fit, problem solution fit. We're effectively saying, now, do the members of the founding team are they clicking with the vision? Okay, because this is where the problem comes in building the right team. Are they clicking with the vision? Do you see when you need to sit down and ask the people you're in business with, do you see what I see? Okay, because if the two of you are not seeing the same thing, how are you going to move in the same direction? And how are you going to push towards the same thing? So, do you see what I see is a question that we all need to start answering from each other. Now, we've talked about this Ray Dalio's 3-level selection process. Now, in terms of the modern startup, one of the things we've seen is that there are 5 members. There are 6 members of the modern startup that we're looking for, and we're going to end here today, which is the visionary, the prophet. This comes from barbarians to bureaucrats concept. But when you start to pick it up, I've added a few to it myself. In terms of some of the other ones I've seen 6 kinds of people. One is the visionary, the prophet, the person who sees something and energizes people. Now, remember, the prophet is extremely important because they have to see something that galvanizes a group together. So that is the key goal of the prophet, to build a strong enough vision that attracts mad scientists, barbarians, and designers to join a team together, join hands, the same way Shoe Dog did. Even Nike, he attracted Bill Bowerman, who went and worked on that waffle print shoe in his backyard. That was mad scientist behavior. Harley Davidson, you had Arthur Davidson, who attracted William Harley to actually come in. The Davidson brothers were together, but Arthur Davidson had attracted William Harley, who was a mad scientist who was working on the product, while his older brother was a go-getter who would push the product into the market. The same thing you even find with Nike as well. So in all these startup teams, you always find that there's this person who has a strong prophecy of the market, and they have the strong vision, and they galvanize a mad scientist, because that's the key of a prophet. Can they galvanize a mad scientist, designer, and a barbarian to come through? That could all be in one person. But the point is, can they galvanize those people to come into the fold and join them on this mission? Then there is a mad scientist, a person who is so consumed with a problem, they almost look nuts. Like they stay up at night tinkering. There's this beautiful scene. If you, I'd urge everyone to watch the Discovery Channel show Harley and the Davidsons. It's a miniseries, a 3-part miniseries about the Harley Davidson company and how they built those motorcycles from nothing. I love it. It really resonated with me. But there's this scene when William Harley is building out a new part of the bikes. They're trying to put out a new brand of bikes, and he was toiling night after night, to the point where his wife had to come and grab his hand at 11 p.m. and she had to tell him, honey, it's 11. And that's when he finally realized he's overworking himself here. And that is what you want to try and ask yourself. Can you attract that kind of neurotic, obsessed person who sleeps at 2 a.m. trying to solve the problems of the business? The barbarian, or what I call the street hustler, the person who just gets things done. Who punches through walls, who when there's a meeting that needs to happen, they get that meeting. When there's a sale that needs to happen, they push it to the end. That barbarian behavior where all they want to do is push the things that need to be done. They're the energy force behind the business. And there's the designer, the person who believes in building systems, partnerships, synergies, who always looks at how to automate and interconnect things to make sure that this thing can become sustainable. The industry insider who has phone numbers, who knows where to shake, who knows whose hands to shake, who knows where the regulatory people are, who knows people, who knows things, who knows the history of markets, knows the names of people. The industry insider is extremely important because they get you to know your customers, they get you to know your competitors, and they get you to know your environment. And whenever an action needs to be taken by the barbarian, they can give you direction. So the industry insider can give you directions on your instinctive actions. And the social influencer, who's like your brand ambassador, who's that one who, when they go on social media, they can attract the audience. They are the ones who are in the media. They're the ones who've got a Facebook page that's counting. You're seeing a lot of CEOs in Zambia becoming social influence CEOs as well. That's a very important thing. So these are kind of the 6 roles that we see in the modern startup team. But just quickly, as I want to quickly get through the first 3 here. In the growth stage of a business, at the beginning, just when it's starting, the prophet is the leader. They bring energy, vision, excitement, and inspiration into the business. That's one of the things they do. And they galvanize the barbarian and the builder. Once you get past that first hump, or probably your first 1,000 customers, the barbarian tends to take over. Okay. They're action oriented. They're drivers. They don't care about things. They're rough, but they're true believers in the vision. That's the key. That's a difference. They will never usurp the prophet. They are true believers in the vision. Kind of like Paul in the Bible was very barbaric in his ways. He pushed the gospel everywhere he went. That's how he was. But he never usurped Christ. He never thought he was bigger than him. But he was a true believer in it. And it's these roughnecks who are true believers who push the agenda into the market. And then once the barbarian has made that progress to build the audience big enough and to build this thing into a sustainable business, the builder now comes along with their specialized gifts. They bring skills, they bring in collaborations, they bring in growth strategies, they recruit the right types of people systems, business systems, and they push it into expansion phase. Now, the mistake everyone makes is that they bring in administrators who become too systems and technology oriented, bureaucrats who now start to undermine the profits, the founders and everything. They're not creative, they're political, and then next generation people just burn the thing down. You need to now hand in a synergist who is the combination of the prophet, the barbarian, and the builder. The person who brings these 3 things together now becomes that. They edify the founder, they glorify the past heroes, they resell the vision, they remind the troops, they unify. They're not even trying to be heroes on purpose. They unify the believers and they drive out the bureaucrats, and they don't seek credit. But these are the people who are the natural born leaders of tomorrow. So one of the things I really want everybody to understand is that you really want to try and go from 1, 2, 3 all the way up to a synergist. That keeps your business going, as opposed to bringing in the administrative crowd. Now I'm going to be talking about teams for the next couple of weeks throughout the month of July. I will be talking about how to build teams. We'll be talking about the 17 laws of teams by Robert Maxwell. I'm sorry, by Maxwell. We'll be talking about the 17 qualities of teammates. We'll also be talking about the 5 types of relationships that you can talk about in our enterprise section as we go through team building. But I just wanted to give my final thoughts today, which comes from Steve Jobs, who says, great things are never done by one person. They're done by a team of people. So I've seen some of the answers in here. Ogripiri has said, teams are better than people, are far better. Good morning. Good morning, Tsonka. Joshua has said, I think the key is the right team. Joshua Congo has said, I think the key there is the right team. Correct. The right team that share values. That's a very important one. And he has said, I do like the analogy. Yes. Thank you very much in all of this now. And hopefully that does help with everyone in learning how to build your starting team. So to everyone, I wish you well. To all of you, answer this and share this video out with as many of your friends. And remember to write down what your answer is. What is better for business? Teams or going solo? Have a wonderful day.